So on daily, and haven't missed. So we are aggressively looking for opportunity instead of trying to predict the market. We try to analyze the market and see what uh, what price has done and position ourselves in the most accurate way. Patience is key and critical. Patience is like silence. Silence and patience are the same. It's golden. The key to succeeding in this space is silence and patience. And looking at these OKEX, and another thing I want to state is brokers' price differentials. Different broker, different price adjustment, and they all adjust price in order to make your analysis look stupid. So when you are charting any pair, please try and chart multiple brokers. Then charting multiple brokers, then whichever broker you are using, use their chart to make your analysis, whether you like it or not. Your broker might give you, like for example, the the buy idea we missed in BTC buy was by 140 pip difference from the broker we're using, and as a result of that, it didn't trigger. So it's very pathetic and it's a fraudulent art, and every broker do it. They call it broker spread. That's not broker spread. They use different reading because when you place the area of reaction in the market, when you place your line on it, it doesn't tally with other brokers. So they all do these things for the purpose of as smarting traders. So when you are charting, chart multiple brokers, and if you are looking for broker that you will use this entry, use the broker you are trading with. If you are trading with OptaFS, use OptaFS chart to chart. If you are using Exynos, use Exynos chart to chart. You can't be using Exynos and you go and use Binance. You are going to miss a whole lot of trade. You are going to miss a whole lot of trade. It's a trade secret, and I really feel upset, and I want to share it. So if you are listening to me, you do this and follow it. So please, when you are charting, follow your broker chart. Do not use TradingView. TradingView, of course, on TradingView there are different brokers on TradingView. TradingView anchored brokers. So their readings are different. So at the end of the day, the only reading that matter is your broker. Your broker reading is the only reading that matter. The rest is insignificant. So you must know this. You must know it. So we are looking at this on daily, and we have a breakout, and we're expecting we'll have a descending trend line. We'll have an accompanying descending trend line again, and we'll have a breakout from here, which I technically I'm viewing and seeing how price, try to play on the structure after respecting it, and we break and return back. And honestly, this is looking like um, a moment that will return price to an anticipated area. We are anticipating price in this area. A push into this area will be around the 99 100. That will be a payday. That will be another payday. So it's a function of being patient and ignore the market and the brokers with what they're doing, and let's see if they bring it to that level. But however, if price fails from this level and falls down, most likely you are going to see it again, just like I earlier said, will be on this floor. And if it comes here, it will be on double confluence. If price comes to this area, it will be on double confluence. The reason is because we have a breakout from a descending trend line on 4 hours. So if price comes here, it will come here at double confluence, creating a higher probability. So if it comes here, that will give price the impetus to return back, and when it returns back, it's going to break the structure, and it's going straight to this place. That's what I see. And just because you have said something doesn't mean necessarily price will do it. At the moment, there's reluctancy in upswing, indicating lack of liquidity in the market. And that lack of liquidity in the market is very evident by choppy buy, can, um, buy candles. And when you look at it, let's see if we can find a structure at this level. I just saw it, and it's not looking nice. It's not looking nice. So let's focus on the range. So what we see here is if price manages to break there, price will come here on the double confluence where it meets a descending trend line acting as a supply roof that guided price from the current all-time high 109,863, and at that level I think market will pick up there. Then a break of that structure will ultimately mean that BTC wants to do more selling. If it breaks out that structure, then most likely it's going to break the structure and price will continue to come down. Price will continue to come down. And I'm also anticipating here on the daily time frame. This is a nice position to wait for price on the daily time frame. So I think at the moment it's a little bit critical to allow the market do its thing. It's under bearish impulse, and no one can actually tell what he wants to do. But the retest of 39, I mean 89, 300 level. We see what's going on. Let's see how 80, 83, 666 does. So we're looking at 83.66 as a potential buy place in line with the ascending trend line. So if it fails, it's okay. If it fails, it's okay. But at the moment, I think the market will have to dip very well for us to see an upswing liquidity. So this is what I have on daily. And another clause again, I also want to impute and contribute to the trading community. It's another area here where I see on potential swing. So if price comes that there, of course, this is a valid floor. This is a valid floor. This floor is valid. So because of the validity of that floor, if price comes there, it's going to come there also in another confluence where we have price and also leverage on the past, and it gave us a nice buy opportunity. So if that happens, then this is a nice floor. This is a nice floor starting from July 2024, and you see it here, and this is a valid floor for me. It's valid. So let's see it if it comes to that level. If it comes to that level, then of course a breakout from there will come here also, where price will come here, pick liquidity and respect this descending trend line, and will most likely pick up from there. And a break of that structure will ultimately see price. Of course, if we break this structure, we are going down. We are going down more. And whatever brings price here, we will first of all reinforce our knowledge of a weekly time frame. That on a weekly time frame, we must see that if price plays into that zone, then the market has set up a more bearish days, and get to look at it from this perspective on a weekly time frame, where we'll have our weekly close. These are weekly highs that brought a significant sell-off. So a price push into that area. Of course, it's sustained price, and if we break out from that structure, that will be a weekly body close, and we want to make sure that on a weekly that there is a break below that structure. So if there's a break below that structure, ultimately we have switched through. We are switched into full bearish. Of course, if we break into that structure, it hit price. You can see the way it hit price. You can see it the way it hit price here. Hit price firmly on weekly. So in fact, this was what had this weekly. I mean, last week price action from further downswing. So if price comes down and break that structure, if the structure is broken, then technically we have no hope other than to continue to sell down until we come to this structure. And in a more aggressive bet, there's area of strong liquidity by way of a strong rejection candle, which is also evident and very clear. We see price here creating a demand structure, the price here creating a supply boost, and after which we have pulled up to create a new all-time high. So if price returns there, that makes a 49,188 a valid demand floor. But at the moment, um, price is still rallying from what you can see here, and there is a break on a weekly candle. This green weekly candle broke the structure and it came on a retest. So most likely it's opening a pathway for price to continue to move, and see if we can retest 98 and maybe heading into 100 level. And the sad thing there is to see that we are not watching why this is happening. It's going to be a very sad day. So it's for us to find an opportunity and see if the market can pull down a little bit more. If the market pulls down a little bit more, then an opportunity to get in. But most likely today candle is end of the week candle, and how it ends will give us a clue as to how the next day candle will start, which will be a new week candle. So if today candle closes and it doesn't cross the structure, then we know that. By Sydney Open, the next candle will have will be a full time reversal, meaning that the weekly candle closed above the support or closed within the support range. So that means that sellers can't do more than enough, and the buyers will withdraw from there and move forward. But if the price breaks below the weekly support structure, of course, it means that that buying was a fake buying, the market will just turn to sell automatically. But however, we are saying this, let's not forget the descending trend line on daily. Let's not forget this descending trend line on daily. If you look at it from the line chart perspective, you also see a breakout, and not just only the breakout. After the breakout, price tested it, and we are seeing somewhat contested buy struggle at 8400 level, 83, in 860, 870 level. So I think the market is doing this consolidation for a reason, either to continue upswing or break out from the structure. And as long as structure is continuing to be hammered all the time, it weakens the structure. So if the structure continues to stay in this zone and it doesn't break the structure, and then the market will either move up or move down. So two things can only happen. And we're looking at it, and today is a bearish candle, and we hope that the bearish candle continues by close of the day, and so that it will set up tomorrow for a buy. And for me, the best time to look for a buy opportunity if market manage to move away from there will be on this level. So we want to see price clean this level for us. We want to see this level clean, right? So this is a daily roof. This is a daily roof. So for example, if this daily roof is broken, which I don't know how they're going to do it, but if that daily roof is broken, most likely if you have a break and close, price might be attempting to go up, and that would be a show of strength. That would be a show of liquidity, and we are not anticipating early liquidity flowing into this. But however, the sell-off of bonds by China and Japan, which they hold in the United States. I don't know if they want to invest that money in people, but I'm for sure that they are investing this money in gold. China investing in gold, Japan investing in gold, Russia investing in gold. Technically, all central banks investing in gold. So this is what we have, and we don't know if this is going to be what the market will do. But I'm seeing after price hitting 84 level, which is a Thursday low, and the price is pushing in about 400, 500 pips, and that move was not close to our entry. We're expecting around 83.66, 83, even 83, 800 is not bad. Even at 84 is not bad. As long as price doesn't break below this ascending trend line, acting to dynamic support, because we already broke the structure and returned. So we are holding it responsible. So this is what we see, and we hope that this and let's look at it again using our SMA. Let's see what we can see from there. From our SMA, you see that we have um, we have a clue as to what's going on. You can see that the SMA hand is regarding the support. So if price returns at 8400 level, 83 666, 83 700, 83 maybe 800, you might look for an opportunity to get into a buy, as this forms a strong support level on daily. On daily, the market is still a strong daily support. So most likely it's respecting it, and who knows, it might the next day candle might just pick it up from there and buy up. So we watch it and see if the price comes down to 83.66, 83.700, 83.800. That would be an opportunity to look for buy. And we also monitor the close of the market day. So if the market closes below the structure, forget about buy and focus on sell. Yes, you focus on sell, hoping to retest. You focus on sell, hoping to retest the breakout of the descending trend line. So at that level, you see that the market may pick liquidity to go back again to possibly test a broken support structure on the supply roof and come down and take the structure out, where you see market return back to the zone. And when it returns there, of course, will be tested as a broken structure. And if that is the case, then the market will move back again, and we might continue until where we peak liquidity at 57, maybe way below. But structurally, we will follow structural structure, and just keep an open mind. Keep an open mind and see what it does. So I think that buy, we use that early buy, let's hope that price comes back into 83.66, 83,700, 83,800, and maybe 84. You might want to look at buy opportunity. Right with the sentiment of the market. The market is still bullish. Still bullish. It's we have a few points backing us from the SMA daily.